What's up, guys? Tuesday, the 8th of October, and it's going to be an interesting week. We've got Fed minutes tomorrow on the 9th. We've got initial claims, continuing claims, some CPI going on the 10th, producer price index on the 11th. So it's going to be a lot of stuff happening this week. We're going to see how this pushes the market around, but we know the thing that has really driven the Fed as to whether or not they're getting closer to their target rate, which is 2%, or target inflation, and they're going to be pushing the rate down, pushing that target based upon what's happening with jobs. But then we had this massive, amazing job report that showed jobs going up significantly. We have consumers spending more money. The economy is still considered to be really, really, they claim robust. All these things pushing against inflation. So why would they lower the rates even more? They already lowered that half, and that really didn't have the impact people thought it would. In fact, let's show you what impact it did have. Because, this is our mortgage-backed securities market. Remember, the higher this goes, the lower the interest rates go, meaning as that's money flowing into these pools. The more available to lend, the lower the price of it, which would be the rate itself. We got to this point right here where the Fed lowered the rate, and guess what happened right after that? That was where we hit our peak. The peak was right before it. Now look at it coming right off that. I'm going to go zoom in here so you guys can see this. Okay, look, Fed lowers the rate. Bam, what do we get? And it went all the way through that. So it took weeks. We're talking about to break through this. We were the 13th of September, it stayed above it. And we broke into it somewhere around August 24th. So look at that. It was a month's worth of trading, over a month's worth of trading, almost a month and a half's worth of trading to get above that. And we lost all of it in no time. And now we're well below it. So now we got all these other ceilings that are going to be, we're going to have some floors, but look, we got the moving averages are above us. We only have two moving averages below us. We got a long ways to fall to the next moving average. So with the Fed minutes coming out tomorrow, tomorrow. Then we got the consumer price index. We got the jobless claims coming out. All these things are going to have an effect. We're going to see what effect it does have. And if it comes out, we're showing that the economy is stronger than what we were believing it should be because of that 0.5% drop or whatever did that. If that spurred any of that in the economy, we're going to see this continue to decline, maybe touch that level here. So that's why I showed all this to show you what has been our history since we got into this. We got into this channel, broke into it below it in September 2022, and look where we've been. We've been in it quite for a window of time there. We couldn't break into it because that was our ceiling that I called out as it was climbing up here, and then we finally broke into it because the stock market took its beating. Then look where we're at. So we'll see how this plays out. But this is our playing ground, guys. This is our field of business right through here. This is where this is all going to work within, in my opinion. So since it's there, knowing the interest rates are going to be there, these are our ceilings. Look at that, proven ceilings, proven ceilings. Look at how high that's. So when I'm saying you should be locking or instead of floating, people think the interest rates going to get better. You got it. I'm doing it for a reason. I'm saying this for a reason. I'm looking at these charts. These charts are telling me something. Even though people are making other speculations, anybody that's putting their stuff out on their TikTok about how rates are going to go down or Fed just lowered the rate, they don't know what they're talking about. Look at how long they've been in business. Go to the MLS consumer site. Multi-state licensing system. The national. Crap, I'm just going to look it up. Here, let's just take a look at this together, guys. I'm just going to go do this so that way you can see for yourself where to go. So we're going to go to the NMLS. I'm going to Google this thing for you because you want to know how long these guys have been doing lending. So we're going to go to NMLS Consumer Access. So there we go. And you're going to click on that. And you can go in here and just type in a person's name right here. There's my number, 267-844. You can search. Now you have to type in the code here so they know you're not a robot. Take a look at this stuff. Check the box because otherwise you drive yourself nuts as to why that's grayed out. And you get to see by clicking on me how long I've been in business. Now, this is all my licenses. And it will also show you how long I've been employed, and well, at least I've had an NMLS ID. So we didn't have to have it prior to this. But this shows my earliest of 10 of 2000. It doesn't show, for some reason, it doesn't show my first company where I started, which was, well, I think it's only because I only had to show 10 years when I got my NMLS ID. So it doesn't show the broker I started at in 1997. So look at that. If they've been in the industry just since the crash of 2008 or after that period during quantitative easing, then they have no idea what they're talking about. They have no idea what's driving the interest rates. If they're not ones who understand that, you probably may not want to be talking to them. Not that they're not doing a bad job. They can close loans for first-time home buyers or whatever, but you as a real estate investor got to be careful. Careful who you're dealing with, understand their history. You're not going to hire a person to be the CFO of your organization that just got out of high school, or a person that worked as a clerk at a bank. That's basically what you're talking about here. A person that's been doing that short window of time doesn't understand these things. You are a business owner when you buy investment real estate. You need to have the right people in your business. A person doesn't start a big corporation by hiring their chief operators, the CFO and the COO and all those because they're willing to take minimum wage. And that's what you look at when you're just shopping interest rates. Because these people, when it comes time to the chips are down and you need advice and you need to be able to get through something, they may not know what to tell you because all you did was get them because they were cheap. Appreciate you.